wish I knew these things before I bought a property off plan. This is the number one question that we are getting.
Definition of terms. When we're referring to buying off plan, we're talking about buying straight from the developer. I remember there was a song like new shoes, but this time it's a new house.
Yeah. So now what happens most of the time is that people are actually buying properties off plan. So off plan basically means that the property hasn't been built. The developer is actually showing you the plan of what the property might actually look like.
Yeah.
Now at this phase, you don't know how the property is going to be like in reality. We can only tell by what the developer has actually given us.
So there's pros and cons towards buying straight from the developer, and that's what we'll be unveiling today. Firstly, when it comes to the pros level, is that you are exempt from paying transfer cost and transfer duty. Because we know in South Africa, when you're buying a property that's above 1.1 million, now you need to be paying transfer cost and transfer duties. But now, because with the off plan, there was no previous owner. Because there was no previous owner, it was the developer that developed the property. Now you are the first person to be living in it, so the property doesn't have to be transferred from the previous owner to your name.
Yeah.
So you are definitely saving when it comes to those two.
Now, can you please just clarify what's the difference between the transfer cost and the transfer duty?
Okay, so transfer cost refers to the payment that you'll be doing to the attorney, whereby the property will be transferred from the previous owner to your name. So that's transfer cost, whereas transfer duty refers to a tax, whereby if the property passes a certain threshold, which is 1.1 million, then you will be paying that tax.
I like that. Now, I remember there was a client that came to us and they're like, now I bought a property at 300,000. Now I'm able to sell the property at 600,000. Now this person bought the property off plan, and now this might actually be something that is common in terms of when you're buying the property off plan. This is before the first show house is actually there. So you're basically buying the plan, which ultimately it tends to become cheaper when it's off plan than. Now the question was that why would that be a case? Now when you're looking at that specific case, what happened is that the developer was still selling at planning phases. Now it hasn't even gotten to phase one in reality. It's just phase one on the plan. So now technically or basically what happens most of the time is that whilst it's still in that first phase of planning, it tends to become a bit cheaper than what it would be in the second phase.
What I really like when I saw the off-plan route is that you are not paying transfer cost and transfer duties, however you are paying VAT. So someone might say, yes, that means now your buying costs, when it comes to just focusing on your buying costs, you do not have to be having so much, because usually what happens is that when you buy, it's either we have to pay the two lawyers, which is your bond and then your transfer, and then sometimes it does happen whereby you have to be paying deposit. So in this case, let's look at it in this case. So you're not paying your transfer, so you're just paying your deposit if it is applicable, and your bond. Now what happens in terms of the VAT, which is good and bad, it's absorbed in the actual price. Now someone can say, now my buying costs are not so much, but then if you're looking at it in a mathematical way, you're like, but if it's inclusive within my purchase price, what's going to happen is that I'll be paying interest over 20 years on that. So it depends on which angle are you looking at it from.
Yeah, man, I think that's
like that. Eh?
Yeah, I really like that.
I know you're a numbers person.
Because now when you're looking at it, would you rather pay 45,000 of transfer costs right now, get it over and done with, or would you rather have that, let's say it was still the same 45,000, add it onto your bond and then pay it over 20 years? Now remember, if you're going to be paying it over 20 years, you're going to actually be paying more, like close to twice as much as you would. So that's something to really consider, right? Now, the thing that I also not really comfortable with looking at your developments is that it's not 100% that you're going to be moving in the property in a specific date. So if let's say they gave you a date of Feb and saying that on the 1st of Feb you can actually move into your property, it might happen that when Feb comes, the development hasn't actually gotten or reached the target that they want to actually reach, and that might be postponed to June. Maybe sometimes it could actually be delayed towards December. So now the thing about developments is that, especially off plan, is that whenever you're purchasing these kind of properties, you need to understand that you need to be patient. Once it does happen, then yes, maybe it might actually come that you're going to be getting your property. However, sometimes it does happen that it does get stretched through time.
Man, Leo was talking about patience. Someone reached out to us and they were waiting for close to a year.
Yes.
Now, if you guys, I know some people will be like, a year. If you guys know someone, or if you are that person who has been in this situation, please just tell us in the comment section so that people can be aware that this is the risk. As much as we are buying something that's brand new, I'll be the first person to live in that property. It smells of leather. But we also need to understand the risk of course, that is associated to that.
Yeah.
Right. And then the biggest risk for me is in terms of the company itself, because now the developer, sometimes it's business. Sometimes you can go wrong when it comes to business and you can be liquidated. So this means that we do not have enough funds. So ultimately we need to sell this off to another developer. So then what happens is that the developer doesn't have enough funds. So now they have to sell this. This ultimately again results in Labour's issue that it can also now prolong the movement, you moving in, to even a couple of years, because now what has to happen is that these people need to file in for liquidation and the process needs to take through, and then another developer needs to actually buy on board if it does make sense to them. So ultimately, man, this thing of liquidation does become some sort of a risk when it comes to new development.
So now what can I do to actually limit the amount of cons that I'm actually exposed to when buying into a development?
Number one, you need to do research about the developer. So if they have been in the game, been doing a couple of jobs, that's great. And then you can also go there to view another property whereby they did develop, to see their finishing touches. But then again, if they have started with the estate that you want to move in, you have the browser, you can request to check the ones that have been done so that you can see in terms of the quality what's on book versus what is in reality, so that you can compare before you actually pay, or before you sign on the offer to purchase.
I would say that if you are actually going to be purchasing a development, especially if it's off plan, what you need to understand is measurements. Okay, I'm taking you back to mathematics. Now, if you're looking at size and measurements, right, and the developer says that the house or the room, each room is going to be, let's say, 2 by 2 meters. If you do not understand what or how big 2 by 2 meters is, you have a big problem there. Because now you find out that when you go to the property, you've purchased the property, you only find out that you can only put in one single bed in the property, and then the property is already cramped. So now that's something that you need to understand, that going into that particular property, what dimensions are your room, and are you comfortable with how big or small your room is? And now going on to your properties that are more of your sectional, more of your estates whereby you have your own house, understand that how big is your land size, and also understand how big is the property. I remember with the other development, as soon as you open the door, the space between the wall and that door is going to be so small that some people can't actually go past. So understand those sizes so that when you do actually get your property, you do not get shocked.
For me, the biggest con when it comes to development, when it comes to off-plan, something that I really don't like is that I can't negotiate.
You can't.
I can't negotiate. So the probability of you seeing a development for 600 and you be like, hey guys, I'm buying it for 500. It's not gonna happen.
Or 450.
Or 450.
That's what you like doing.
No. There's no below market value there. And now, why it's a problem for me? I'm a numbers person, and being a numbers person is that I buy when equity is there. But now, because with the new development, I'm buying at market value, that means I'm not getting equity based on negotiating. So that's something that's really a red flag for me when it comes to development.
That's like a pro?
The one of signing 2 offer to purchase, the bonus.
Now comes the bonus. Remember, whenever you're buying a property that's a freehold, however it's in an estate, make sure that you're signing 2 offer to purchases. Now, where these 2 offer to purchases come in, the first one is for the property, right? The structure itself. The second one is for the land. Now, the last thing that you want to find yourself in is owning the structure, however, you're not owning the land. Now, remember, this is 2 different things, especially when you're looking at your sectional title and you're looking at apartments, right? With your apartments, you can't really own the land because we are all in the same apartment building and now it's in the same land, so you can't. However, it becomes different when the property is a freehold, however, it's within an estate. You want to own both the land and also the property on it. Well, with some developers, they do allow for this and some don't allow for this. So just make sure that you understand what you're getting yourself into before you sign that offer to purchase.
Interesting. Less than 2 weeks to go. Make sure that you buy your tickets today, because what we will be doing is that we are hosting a property investing picnic. So from our lawyers and accountants, everybody will be there dressed in sportswear. Make sure that you buy your ticket.
And it looks like the weather's going to be on our side, man. So make sure that you get the ticket as soon as possible, man. I'm looking forward to meeting you. Yeah. Looking forward to having fun with you. Dress like a pro
with no